And at this rate, we may just have an entire generation of people who are unable to live out the American dream of purchasing a home. Thank you all for tuning in. This is Kareem with NewTX Realty. I'm a real estate broker and investor here in Dallas, Texas. Today, we will be discussing how credit card debt is preventing potential home buyers from achieving their home ownership dreams. According to a new report from the Federal Reserve Bank of New York, Americans owe $1.13 trillion on their credit cards. And $50 billion, or roughly 5% of that amount, was just accumulated in the fourth quarter of 2023 alone. The scary part of this is that, particularly for young millennials or people between the ages of 30 and 39, the credit card delinquency rates are going through the roof. Now, what does this mean? Basically, this all signals immense financial distress among younger millennials and lower income households. And as the saying goes, stay ready so you don't have to get ready. And that's exactly what we do here on the NewTX Realty YouTube channel. As always, please like, share, subscribe, and comment for more valuable financial insights. Everywhere you look, articles are being published giving glaring reviews about just how well the economy is doing. Homes are selling at record prices. Stocks are at record prices. These businesses are making billions of dollars each quarter. Based on all these factors, it appears that the overall economy is doing great. However, always remember, the stock market does not represent the entire economy. The real estate market does not represent the entire economy. Think about it. With all this inflation, prices are rising through the roof. These interest rates are rising. It's forcing people to lean on credit cards, not even for pleasure, but for survival. And doing this comes at a very steep cost. And I don't just mean 30% interest rate steep costs. I'm saying that consumers' long-term financial goals are being put in the crossfire. Having excessive credit card debt will hamper your efforts of buying a home. Just how will this hamper your efforts? The first aspect I want to talk about is your debt to income ratio. Many people may ask, well, what is a debt to income ratio, or DTI? Well, basically, your debt to income ratio is the portion of your total monthly income before taxes. It basically determines based on how much money you spend on your debts, expressed as a percentage. So, for example, let's say I make $1,000 a month total in gross income before taxes are taken out. Okay. And let's say my total debt is $600 a month. My debt to income ratio would be 60%. Why? Because I spend 60% of my total gross income on paying my debts. Your debt to income ratio is a critical factor in getting approved for a mortgage. Why? Because lenders use that DTI ratio to determine if you can comfortably afford the monthly mortgage payments. With a high DTI ratio, lenders will think you're too risky, and it's possible you won't get qualified for a mortgage. And if you can't get qualified for a mortgage, you can't buy a home. That's DTI. The next thing we're going to move to is your credit score. Too many people don't realize that the amount of debt you owe on your credit cards is one of the biggest factors in affecting your credit score. As your credit card balance increase, you may see your credit score drop. Why is that a problem? Because, of course, we have these credit cards, they want us to use them. Well, as your credit card balance increase, credit score decreases, that makes you appear as a more risky borrower. What happens when you have a lower credit score? You may have to pay higher interest rates, may not be approved for certain loans, but overall, if the lenders think you're a more risky borrower, then the lenders will not want to lend to you. Why is that? Just like DTI, your credit score is a very critical factor in determining mortgage approval. All these things are interconnected, guys. With debt to income ratios and credit scores being so negatively impacted by this high credit card debt that people have out there, it's imperative that potential home buyers create and execute a plan to tackle and reduce their credit card debt amount. Some effective methods may include debt consolidation. You have a 0% interest rate credit card, you move all your credit cards to that card to save money. There's also budgeting. You make a budget, try to save some money, make sure you're not spending your money frivolously. That also may be very beneficial. It's even gotten so crazy that people are now negotiating some of the debt that they owe, trying to get these credit cards paid off or whatever creditors that they owe money to. Now, all these things are good. Let me just tell you straight up, none of these are as effective as practicing financial discipline. Regardless if you consolidate your debt or if you budget the debt, or if you try to negotiate a reduction in the debt, none of that will matter if you're constantly spending and adding to your credit card debt load. So making a budget will help, but it's also pointless if you don't stick to it. This is why practicing financial discipline is paramount. Being able to control what you spend your money on is a very important skill, but it's also a very difficult task to implement. It requires you and I to make very tough decisions. So, for an example, I may have to get a roommate. And by getting a roommate, it will help me pay off my debt faster. It will help me cut my costs. I may have to forego that trip I've always wanted to go on for the last year. I might even have to stop eating out and begin meal prepping. Whatever it is, the fact of the matter is that we all have our heart's desires, but we also have the free will to choose how we will prioritize our wants and our needs. I sure love going to the Cheesecake Factory, but if it's between the Cheesecake Factory and becoming a homeowner, I'm sorry, guys. I'm going to have to go with the latter. By implementing these strategies, what kind of impact can it have on our homeownership dreams? I'm glad you asked that. I have clients right now that are actively paying down their credit card debt and getting their finances in order just so they can place themselves in the best position to be qualified for a home loan by the end of the year. So yes, it's taking them immense dedication and sacrifice and delayed gratification. But when they finally close on that house of their dreams, all the sacrifices will be well worth it. I'm going to share with you one method that one of my clients is using to tackle their credit card debt. It's basically called the 7 Baby Steps to Financial Peace by Dave Ramsey. Now, I do want to stress they're only utilizing the first 3 of those 7 steps to be able to purchase their home. First step is saving $1,000 for your starter emergency fund. Second step is paying off all their debt using the debt snowball method. The debt snowball method is where you pay off your debt with the smallest amounts first. And as you pay off those debts, the money that you use to pay those off, you roll that money into the larger debts and so forth and so on. That's why they call it the debt snowball. They should be finished with all of their debt by mid to end of June at the latest. Now, the third step, this is a big one. It's going to be saving 6 months of expenses in a fully funded emergency fund. This one is important because once they have that 6 months worth of emergency funds, by that time, they will have shown financial discipline. They would have been able to stick to a budget. Their debt will be wiped out, so their credit scores will be through the roof, and they will have placed themselves in a best possible position in order for them to get approved for their home. It can be done. As I mentioned at the beginning of this video, we have over $1 trillion in credit card debt. However, you don't want to let that be the reason it keeps you from achieving your home ownership dreams. It can be done, but it's not easy. But as the saying goes, nothing worth having ever is. Thank you so much for sticking with me and giving me your support. We got to make sure that we're not allowing this credit card debt to stop us from achieving our home ownership dreams. We have to do something, because if we don't, we will have an entire generation of people who are unable to purchase a home. But have no fear, because why? We have the solution. And that solution is making sure that we are practicing financial discipline. As always, guys, please like, comment, subscribe, hit the notification bell for more valuable insights from the New Texas Realty YouTube channel. Until next time.